Hello all and welcome back. I hope you're all doing really well. Following on from the video released yesterday to do with Ubisoft's joining the governing council for Hedera, absolutely massive news. We've also seen now some more institutional slash company adoption. So Joget, which is a sort of low code application platform, effectively has now released Hedera integrated Joget apps, which can be deployed within 15 minutes, and they're actually focusing on immutable forms. So immutable being once it's submitted, it can't be modified, i.e. what the blockchain effectively is. And this will enable businesses to deploy these forms rapidly, utilizing the hash graph algorithm. Not only that, quite big as well, because Joget themselves is partnered with actually 400 plus enterprise customers, including Fortune 500, government, mid-market and small businesses with 12,000 community members. So yeah, enterprise low-code application platform. So again, this is just showing the power of Hedera, the power of HBAR and the hash graph algorithm, and the potential that this has. So Joget, for example, tons of companies on here. I mean, you can check this for yourself, but I mean, you've got loads of automotive manufacturers, Toyota, BMW Malaysia, Honda in Thailand, all sorts of different things. I think I've seen the NHS on here somewhere for all those of you in the UK. There's universities, all sorts. So massive amount of exposure here again for Hedera and what it's capable of doing. And not only that, these consumers of the Joget platform, once they get a taste of what the Hedera ecosystem and Hashgraph is able to deliver for them, they may begin to explore and look to deploy it themselves within their own business and their own products. So really good news there. Seen this graph as well that was posted, or chart or table breakdown, effectively just looking at the diversification. I was interested in the industry, just how diverse the governing council is for Hedera in terms of the industries that we span: education, financial, professional services, containers and packaging, telecommunications, electronics, obviously now gaming and entertainment, information technology, aerospace and defence. I mean, it's a massive subsection of the sectors across the globe that drive economy growth within countries and regions. So really exciting stuff for Hedera themselves, obviously continuing to move forward. Mass adoption looks like it's just beginning effectively. I also wanted to touch on in this video and compare HBAR with 𝗟𝗜𝗏 protocol. So both of them aim to fill the same sort of void, and they're both sort of third generation public ledger technologies, and there's not really a breakdown video on these two projects, so I thought I would sort of compare HBAR and 𝗟𝗏, and we'll kind of look at some benefits and advantages of both, and which kind of takes my vote, which I think you'll probably know is definitely going to be HBAR, but I'll discuss nevertheless. So one of the first things that will be said about HBAR and 𝗟𝗏 protocol is that 𝗟𝗏 protocol is fully decentralized. Technically, Hedera is also fully decentralized. The governance is fully decentralized, consisting of up to 39 term limited and highly diversified leading organizations and enterprises. The only thing that isn't technically decentralized is the nodes that run them, because they are with the 39 term limited and highly diversified leading organizations and enterprises. So realistically, by justification, Hedera is decentralized. It's just a bit of FUD effectively that we hear about Hedera not being decentralized, and obviously now as well we have open source code, patents are being lifted, etc. So I think that's kind of redundant anyway. If we look at transactions per second over here on the sort of Hedera's website, we can look as well, 10,000 plus TPS. We've discussed it previously on this channel that realistically the transactions per second for Hedera is near enough infinite once you start factoring in rollups and sharding. 𝗟𝗏, on the other hand, is already using rollups and sharding to maintain the TPS that they're already doing. HBAR does not need sharding until several 100,000 TPS theoretically. So is 𝗟𝗏 actually able to scale if they're already having to use sharding? This is insufficient effectively for mass adoption. They're approaching 100,000 transactions per second via sharding level 2. Hedera is capable of doing that without the need for sharding. So interesting. 𝗟𝗏 as well is also proof of stake, so fantastic that we see that. I mean, Ethereum is moving towards proof of stake. Proof of work was obviously a good concept, and helped create the cryptocurrency markets, but wasn't sustainable, so that's fantastic. Hedera proof of stake public network is powered by the hash graph consensus algorithm, or gossip to gossip protocol. Obviously, it achieves the highest grade of security possible, which is ABFT, which we can see on here. The Hedera proof of stake public network powered by hash graph consensus achieves ABFT with blazing fast transaction speeds and incredibly low bandwidth consumption by combining high throughput, low fees, and finality in seconds. Hedera leads the way for the future of public ledgers. I won't talk too much more about ABFT because it is a very complicated sort of topic, but effectively ABFT stands for asynchronous Byzantine fault tolerance, and it's kind of derived from a theorem of the Byzantine generals sort of thought experiment, and the hash graph algorithm effectively used in the Hedera public ledger achieves this gold standard with a mathematical proof that is ABFT, and it is the only blockchain or hash graph, whatever you want to call it, effectively, that has this. There is no other cryptocurrency out there which is able to deploy ABFT in such a robust and mathematically proven manner. It is unique in that respect. It was a rigorous math proof published in 2016, and it was verified by computer in formal verification by a university professor. So sort of big stuff there for Hedera in terms of security over near protocol. I think if we talk about fees, realistically the fees are both negligible, much improvement over the gas fees that we'd see on Ethereum. We can see over here that the average fee for HBAR is $0.0001 US. Near protocols transaction fees do scale with the TPS. The higher the TPS, the lower the fees. Therefore, at the maximum technical TPS, we have the minimum number of fees. Currently, the fees are around 0.0038. So near is currently 2 times the transaction fee. Still really low, but think scalability. As things continue to scale, near will approach Hedera, so they're kind of equal in terms of fees. We can't really sort of determine a winner from that. What we can also look at as well is the fact that Hedera and Near both support smart contracts, allowing decentralized contracts to be linked to their blockchains, developers to build decentralized applications on top of their protocols, e.g. DeFi, decentralized finance. While Hedera Hashgraph is fully deployed, Near protocol is not though, and Near protocol is expected to be fully deployed in the future. There's one thing I will say as well is obviously Hedera and Near, they're both getting sort of applications and stuff built on top of them. Interoperability is a big thing. You've got some sort of dev teams working, for example, Hashpack have obviously got their Hash Connect for their interoperability. My comparison on Near versus Hedera, realistically, there is only one HBAR. I think the potential for HBAR far exceeds what Near is capable of doing. Don't get me wrong, it's a very good blockchain technology and has quite a robust ecosystem, but nothing quite like what we have with HBAR and the world-class organizations, the titans that back it up as a project. Anyway guys, I hope you all enjoyed this video. Drop a like if you liked it. Please subscribe for future videos. Feel free to drop a comment if you've got anything to say. Catch you all in the next one.